This week, the Bank of England's interest rate setting committee will meet to decide what needs to happen to support the UK economy following the vote to leave the EU. With me to discuss this is John Wraith, Head of UK Rate Strategy at UBS. John, thank you so much for joining us.
No problem.
So what are markets expecting to happen this week?
There's fairly widespread expectations, wide range of expectations. I think a cut in the level of bank rate, the official policy rate, is looking fairly certain. The markets certainly think it is. And then beyond that, a possible range of other measures. We think quantitative easing, more purchases of government bonds is the most likely outcome. But there are other measures relating to credit markets the Bank of England could consider. And
can we see anything in markets about showing what these expectations are? Is there any way of indicating what's about to happen?
Yeah, to a degree. I mean, this chart that shows the 10-year gilt yield so far this year, you can see what happened in the wake of the referendum, a very sharp fall in yields, which has continued at a slightly slower pace recently. I think that's partly because investors are worried about medium-term growth in the UK being weaker than it would otherwise have been. These are record low yields, so it really does signal some fairly high levels of alarm. But this is also anticipation, to a degree, of large-scale purchases of these instruments by the central bank. It's hard to quantify because there is so much uncertainty around at the moment, and they are considering various measures, but we would say there's a fairly high likelihood priced in here.
So the 10-year is the benchmark rate. Are there any other gilt yields that we should be looking at if we're thinking about what might happen this week?
Yeah, I mean, last time the Bank of England conducted this sort of policy, they bought everything beyond 3 years to maturity. So if you look anywhere on the yield curve, really, you can see some gauge of expectations as they're developing. When you look at the very front end, that's more connected to decisions about the short-term policy rate itself.
This is the 2-year gilt yield?
Yeah, yes, exactly, for example. So again, here you see a big drop following the referendum. Prior to the referendum, markets were expecting the next move in rates to be up at some point over the coming months. They're clearly very much expecting now the next move to be down. The other interesting thing to note here is these yields are almost at zero. Now, they can go negative. They have in core Eurozone markets, for example. But essentially, these front-end rates are fairly pinned to the floor here. So any moves further down the yield curve tend to change the shape of the curve as well.
John Wraith, thank you very much. So markets have priced in a 100% chance of rates being cut, but the thing to remember is, in July, they were wrong.